Hey everybody, Chuck Barone, Friday, September the 16th, 2022, wrapping up a crazy week in the world of finance, in the world at large. Just, I don't know, guys. It's it's getting kind of hard to stay positive when all we get is this zany stuff going on, and watching the way our leadership is performing doesn't really inspire a lot of confidence that there's anything that they even have a clue on what the heck to do to make things any better for everybody. But anyway, welcome to the show. We appreciate you guys. As always, before I start the whole wrap up here today, just want to say thank you. We appreciate your support for the videos and the channel. Without you guys, we're nowhere, and we appreciate your continued support for the show. We appreciate it. In the markets today, well, not a great day for the markets. The stock market was down again today. This was its worst week since June. A lot of bad news this week, obviously, with the PPI, CPI numbers. The reality that this inflation is pretty serious and the Fed's going to have to do some work to get rid of it. Bumming the market out, obviously. You were talking worst week since June for the S&P 500 and NASDAQ. Just a crummy week. The news that we'll talk about later in the show, just adding to this whole thing. They say, and it's probably the truth, that there's really only two motivators in the world, fear and greed. Well, we've seen the greed side of the market for a long time now, in real estate too. Now the fear is the new champion, and people are stampeding out of this market. I think the snowball's just starting to roll down the hill, guys. It's going to get worse. In the bond market today, bond market was basically a flat day. I think they're kind of still digesting all of this stuff. Next week, a very big week coming up, obviously, with the Open Market Committee meeting. But today, the 10-year settling at 3.45%. Basically unchanged from yesterday, and the 2-year sitting at 3.86%, again basically unchanged. You still got that 40 basis point spread, inverted yield curve. Bond market looks unnatural right now. The 1 year getting ready to test 4%, guys. That is really going to be a trigger, because that is the treasury that's linked closest to CDs and other deposit instruments. I think that if that gets to 4%, you can see a pop in some stuff if the banks ever get behind, giving their depositors a little bit of the benefit of these rising rates instead of just hogging it all for themselves like they do. The dollar today, basically a flat market on the dollar. Still the champ, 109.66 on the index. No reason to see the dollar coming down at all right now. It's just basically unchallenged at the top. And it's putting a lot of pressure on commodities prices, obviously, causing a lot of pain around the world, putting a little pressure on metals. But metals today were up small. With the dollar not showing any movement, gave a little bit of breathing room to the metals market. Gold settling at $16.75 an ounce. Silver at $19.64 per ounce. Metals are hanging in there, especially silver. I think that if the metals market can find any reason to have a little bit of run up to the upside, I think they're kind of looking for it. Oil today, up small, $85.28 per barrel for West Texas Intermediate. Oil's been kind of gyrating, as we've talked about on the show. One day the inventories are up, the next day they're down, the one day there's more production, the next day there's less, and there's just been so much conflicting information. Oil's kind of been gyrating all over the place lately, in a trough, but nonetheless moving, seems like, every day. And natural gas, another crazy one. Natural gas today settling at $7.81, down 6%. So, in the last 2 days, natural gas has lost about 16%. And this market is just swinging crazy. I mean, you got to have some serious cojones to want to be playing in this market, guys, because these moves are dramatic. You typically don't see this kind of stuff in the market. Bitcoin today down small. Last I saw, $19,663. Bitcoin's It's kind of stuck right now, I think, guys. It's in a trough. It's been in that trough for a little while. It broke out a little to the upside, but profit taking came in quick. And now we'll see. If it can get above 20,000 and stay there, I think that's a really good sign for Bitcoin. If not, I think we're going to go test that $18,500 support number. And where we go from there, we'll see what happens. And news you guys need to know today to close out this crazy week here. As you guys know, there's been a lot of speculation on where the Fed will finally end up on their overnight rate before they pivot to easing rates back down to support the economy. Last month, the number, they call it the terminal number, and basically that number is what the market believes the end game will be the final high number for the Federal Reserve on the overnight rate. Last month, 3.7%. They just took a new survey, came out 4.45%. The market is seeing now. Not great news, guys. I think the Fed will be at 4% by the end of this year. I think that it'll be above 4%. I think 4.45 is a little bit optimistic because that's basically you're factoring in maybe a quarter point increase next year. Do you guys really think that this inflation number is going to get tamed down in the next 4 to 6 months? Really? I don't think so. So I think this might be a little bit optimistic, but nonetheless, a 75 basis point jump from last month's estimate gives us a little bit of an idea that the market is starting to understand now that the pivot isn't coming as soon as they thought, and that rates are going to be higher than they've been estimating as well. I talked a little bit yesterday about how inflation is affecting everyday people. $460 per month extra cost just to live the same year over year, which is crazy. But I did a little digging today, and check this out, guys. This is some of the percentages of stuff that people buy every day, pretty much. I mean, not all of it, but most of it is everyday stuff people buy. And the percentages, it's gone up year over year. Listen to this stuff, guys. Eggs leading the parade, up 40% from last year. Margarine, 38%. Butter, 25%. Flour, 23.5%. Now, these are the basics, man. Eggs, butter, flour. Everything you see that's finished in a store usually starts with these, right? The bakeries, the breads, and everything else. It starts with this. Olives, pickles, and relish, up 26%. Chicken, 17%. Soap, for my soap investors out there, 18.5%. Cereal, 17.5%. Milk, 17%. Airfare, so if you're traveling, up 33% from last year. Tires, now this is not something you buy every day, but I just thought this was, wow, tires are up 15%. And to finish it off, even though gasoline prices have been coming down, as of today, they're still 25% higher than they were a year ago. This is stuff that everybody, I shouldn't say everybody, but the vast majority of people use every day. A lot of this stuff is foundational stuff that leads to further stuff down the road, right? Like flour and eggs lead to bread and lead to bakery goods, and on we go. This is an idea of where we're at, the reality we're living in here, guys. And this stuff is not gonna get better soon. Another interesting thing today, I talked about this last week, record withdrawals from equity funds. Everyday investors are jumping out of this market with both feet. It's not quite a stampede, but it's getting that way. Just this week, $10.5 billion withdrawn from equity funds in the market. This stuff last week was 16 billion. I mean, these numbers, money is scared. It's running to the safety of the dollar, I guess. I don't know where people are stashing money these days because the bond market hasn't really been moving up at all. But nonetheless, really nothing's been moving up. People are not keeping their money in the stock market. So maybe they're just holding cash to see where, in a state of confusion, what do they do next? Interesting yesterday, after the market closed, Federal Express came out with their earnings report, which was a colossal fail. Really bad report. Earnings collapsing at FedEx. They're canceling out everything now, freezing hiring, closing stores, all their numbers crushing. And now they're lowering all their numbers going forward for the year end, for the next quarters. Their CEO having a fit about all of this stuff, says that a giant recession is coming here in the U.S. And, FedEx is another one of those things, guys, that, this is the canary in the coal mine. If people aren't shipping or are looking for ways to save money from shipping, because FedEx is certainly not the least expensive way to go, this is not a good sign for the overall economy when a basic company like this is having these kind of number collapses and their CEOs coming out warning, dropping their numbers and their projections. Further evidence, guys, where we're going here, not good news. To wrap the day up, I've been talking about these further signs of the apocalypse here. And just interesting stuff I see, that just to show you how crazy right now this world is. So they took the poll for consumer inflation expectations. So people asking them, where do they think inflation will be a year from now? Where do they think inflation will be 5 years from now? And this goes to show you where people's really, how ill-informed people are of what's happening and what's coming, and where, it's pretty shocking, because right now this consumer inflation expectations are expecting inflation over the next year to be 4.6%. That the Fed would cheer that pretty hard, and you'd hear a lot of screaming and yelling for a pivot on these rate hikes if inflation was only at 4.6%. I don't see that, guys. I don't see that becoming real that quickly, unless the Fed really slams the brakes on hard with rates and just crashes the economy, which I don't really think is part of the plan. I think inflation probably over the next 12 months will be at 7-ish. Obviously on its way down with these rate hikes from the 8.5 or 8.9 or wherever we're at this month. But I don't think we're going to get to 4.6 in the next 12 months. And they're expecting the 5-year inflation rate to be 2.8%. So at least they have some reality there that the Fed will not get its target 2% rate in the next 5 years. Also, this one was surprising. The last real report of the week was the Michigan Consumer Sentiment Report. And they reported consumer sentiment was up to 59.5, up from 58.6 last month. So consumers are feeling better about the economy. I guess if you believe inflation's only going to be 4.6%, you might feel a little bit better about it. I don't know how. What do you guys think? Do you think these numbers, where do you think inflation will be a year from now? How do you feel about the economy today and moving forward? You think it's going to get better, or you think it's going to get worse? To see these kind of numbers tells me that I don't know who these people are getting their information from, who they're listening to, if they're listening to anybody at all, or they're reading anything, or they're doing anything for themselves to kind of get a feel for where we're going here. Pretty surprising numbers to me in the face of the reality of all the stuff we talked about prior to that. Anyway, guys, I'm glad it's Friday. I'm glad this week is over. Next week, a colossal week. Open Market Committee meeting, a lot of further data coming out. So next week's going to be an important one. Make sure you tune in here so we can keep you guys abreast of what's happening. If you've been listening to what we've been saying, and I guess we need to go over this a little bit more next week in detail, what we believe your strategy should be right now and why we believe it's the best strategy. We'll get into that next week. But the people who've been listening to what we've been saying are doing pretty good right now in the face of all this stuff. If you've been investing your money conservatively, you're not feeling the pain in this market like, these heavy growth people are going, or people in more risky assets, right? If you've been banking a little bit of money like we've been advising, you're watching your savings grow. You're actually seeing it maybe start to make a little bit of money in your savings account or your money market account. If you've been trying to trim debt down, your payments may not be going down because the rates on those payments are going up, but it always feels good to pay debt down or off, at least to me. Anyway, guys, that's what we got for this weekend here. Everybody go enjoy the weekend. We'll have plenty of stuff to talk about next week. But for the meantime, enjoy the weekend. Spend some time with the family, people you care about, your friends. Relax. Get some pleasure out of this life, guys. And we'll be back on Monday to get you set up for the week, to give you an idea of what's coming and what to look for. Have a great weekend, everybody. We'll see you again on Monday. Thanks. Bye-bye.